Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. Today's day is July 24th, 2023. I'm going to take a look at a number of different things. I'm going to start off with taking a look at the stocks and take a look at some of the major currency pairs to kind of get you up to date with all the movement that we're seeing in trading here today. So let's get started. Stocks are getting hammered. We're seeing the NASDAQ index down around 475 points, minus 2.64%. And as luck would have it, the last few days we've seen the price rebound back above the 200-hour moving average, back above this longer-term trend line as well. That gave the buyers some false hope perhaps a move back to the upside if we were able to get back above the 100-hour moving average, which we fell back below on this day where the price gapped lower. That would be more positive, but we had the gap lower instead, and the price action has continued to the downside. From a technical perspective, we are approaching a level that I consider important right here at the 17522.29 area. You can see that in this day right here, we gapped higher and then based against the level right through here. And trading here today, we're moving back down toward that level. So if we break below the 17522 level, however, we could see a rotation back down toward the 38.2% retracement of this move to the upside. That would get the corrective move to at least that minimum correction level. That level also happens to correspond roughly with this high price right here before the gap to the upside would feel likely or get close to filling that gap, in other words, for the NASDAQ index. So be aware of this level, 17522, and then if we break below that level, watch down to the 17358 level. Let's take a look at the S&P index because it too did a shift to the downside in trading on the open. In this case, the price had moved above the 100-hour moving average in trading yesterday, but could not sustain and closed back below that level. The gap lower in trading here today took the price below the 200-hour moving average. If you go back in time and take a look at these lows right here and this lows right here, last two times the price tested that 200-hour moving average, we bounced nicely. So things were looking on the up and up, but not today. The price gapped below that level, and again, like the NASDAQ index, we're seeing continued selling. The index is currently down around minus 1.66% in trading. Also, like the NASDAQ index, we're approaching a key target level. I'll outline it right here at the 5446.53. This level corresponds with not only with swing highs right through here, but also swing lows through here where it bounced against this level on a number of different occasions, including the 100-hour moving average here before moving to the upside. So that's going to be a key level of 5446.53. And like the NASDAQ index, if we do break below that level, we could see a rotation down toward the 38.2% retracement. That's of the move up from this low to this high right here. So be aware of that level. Also roughly corresponds with this low right here, which is the high of a gap move back here in the middle of June. So be aware of that level. So both the NASDAQ and the S&P index are looking pressured, but we are approaching some key support levels in each. We'll see what happens against those levels. Let's take a look at some of the currency pairs. We'll start off by taking a look at the euro versus US dollar, and this is the 4-hour chart in this currency pair. We did fall below this swing area in trading earlier this week, and also below the 100-bar moving average on the 4-hour chart, and 38.2% retracement also in trading here today, reaching a new low for the pair around the 108.2423 level before rotating back to the upside. We're back above the 38.2% retracement and even moved back above the swing area right here. I'm going to put a horizontal line right here at this level right here at the 1.08725-ish type area. With the importance of this, well, we had a swing high right here, then we based against the level right here, and we had a low right here, low right here, low right here, all in this area near the 1.08725. If the price are going to go higher, we need to get it back above that level. It sort of looks like a head and shoulders, doesn't it, as well? So sort of, retrace back to the neckline of the head and shoulders. So be aware of that level. We're going to need to get above that level to increase the bullish bias. Absent that, move below the 100-bar moving average, and we are currently trying to do that as I speak. Would put the pressure back on the pair. Have traders looking toward the 38.2% retracement. The big mover today is the dollar versus yen on the 4-hour chart. I had to spread this out much wider because it's running off the page here, but I want you to see the this this big move to the upside here. And in trading here today, we have moved below the 38.2% of that huge move from the end of December low to the high price that we saw in the month of June. That 38.2 of that move comes in at 153.65. Currently trading 153.45 after breaking lower. This level is now going to be a close risk level for sellers. Stay below is more bearish. Move above, and maybe we get some short covering on the failure to stay below that level. On the top side right here, we did fall below this swing area through here between 154.52 and 154.87. So that's nearly 100 pips higher, or it is 100 pips higher toward the high of that level from the 38.2% retracement. So big moves here in the dollar versus yen as it continues to move to the downside. There was comments from Reuters saying that the Bank of Japan looking to potentially cut the bond buying in half, and also potentially looking to raise rates, although there's some debate as far as that. So that got the market moving to the downside, and also lower stock prices tend to send the yen crosses sharply to the downside. Euro yen, sterling yen, all the yen crosses are reaching to new lows, just like the dollar versus yen. So be aware of that dynamic. But in the short term, watch the 38.2 in the dollar versus yen at 153.65 as resistance now for that currency pair. Finally, let's take a look at the dollar versus Canada. We have the Bank of Canada interest rate decision that was to cut rates, and the price action was actually limited. We are trading within this high of the red box, this swing area near the high of the red box that I've been talking about for, well, how many weeks now? You answer that question. But the price actually moved above the high of that to 138.08, above the 138.07 level. You can barely see it above that level, but the momentum though faded really quickly, and we rotated actually below the low of that swing area at the high at 137.84. We're since moved back into this yellow area, so it's not over for the upside and potential break of this currency pair outside of this red box that has confined the range since April. And if we do get above that level, then we'll look toward this extreme high right through here for the 2024 year that came in at 138.44. Be aware of that. Now, if we do start to move back below the 137.84 level, then we could see some disappointment. Have traders looking back toward maybe this level right here at the 137.62, or a further move to the downside. I would have traders looking toward this yellow area right here between 137.34 and 137.42. So there you have it, a look at the stock market, which is moving, a look at the dollar versus yen, which is moving, a look at the dollar versus Canada, which had their interest rate decision, and look at the euro versus US dollar from a technical perspective. I hope you found this video helpful. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.